Good morning. We are thrilled that you are joining us today with the Manatee Chamber of Commerce and Blalock Walters for our webinar this morning on what businesses and nonprofits need to know about navigating the federal relief during this time of COVID. We want to thank our sponsors for our webinar series, LaPensi Plumbing, Pools and Air, and Veritas Pest Management. These organizations offer year-long support to allow the Chamber to bring expertise and information to you that is helping you, not just in this time of the COVID crisis, but throughout the year as you look for tools and resources to help you run your business even more effectively and efficiently. It is my pleasure to introduce you to Jenifer Schembri. She's a principal at the Blalock Walters law firm and practices in both the firm's Bradenton and Sarasota offices. She's board certified by the Florida Bar and is an expert in tax law, in addition to having her LLM in taxation from the University of Florida, go Gators, and being a certified public accountant. Jenifer represents companies and individuals in areas including individual and business tax planning, entity selection and formation, corporate governance matters, mergers and acquisitions, business succession planning and transitions, and the list goes on. So Jenifer brings a wealth of experience and expertise to this morning's webinar. So with that, Jenifer, I am going to mute myself and turn this webinar over to you. Thank you so much for sharing your time and expertise with us today.
Thank you, Jackie. I appreciate that introduction. My intention is to give you as much information I can in the time that's allotted. So first, I thought I'd talk about the two loan programs. The first one I'm going to talk about is the Economic Injury Disaster Loan. So earlier, I think it was March 26th, somewhere in that area, we got legislation which is referred to as the CARES Act. And under the CARES Act, they created, or they funded and or created primarily two different loan programs. The first one is the Economic Injury Disaster Loans. So this is a loan that was originally open to any business concern as long as you had less than 500 employees. You may have heard that you were eligible to request a grant. So originally when the CARES Act was signed into law, the SBA was told to give grants for those applying for these loans of up to $10,000 per applicant, and those grants are considered a forgivable grant. Well, shortly after the SBA was given the CARES Act and they started to administer the program, they issued some regulations or some guidance basically that said for purposes of the grant, they would provide you up to $10,000, but it was limited to $1,000 per employee. So how you would apply for an economic injury disaster loan or an EIDL is you would go directly to the SBA.gov website. You input some information, you check off whether or not you'd want to be eligible for the $10,000 forgivable grant. And then literally at some point, if you're eligible for the grant, funds show up in your bank account, and then they contact you about maybe some additional information and then go through the approval process. The loans themselves move relatively quickly once the SBA gets to your place in the queue. So originally, the legislation provided that the loans would be up to $2 million. Recently, I've read that the SBA is limiting the amount of the maximum loan amount to $150,000 in most cases due to the high demand on the funds. That's the first thing about it. The second thing is the EIDL loans. They are repaid over a 30-year period. The interest rate is a fixed rate of 3.75%. They don't require guarantees unless they're over $200,000. So most of them aren't because they're $150,000 or less. But they do require some collateral if the loan is over $25,000. And the collateral, in my experience, the collateral has been, they ask for a security interest in your tangible personal property. And in also my experience, if you're eligible for this loan and they give it to you, the process is very quick. The documents are provided to you in a DocuSign. You sign them within like 3 days, the money shows up in your checking account in direct deposit. And that's it, it's complete. For a certain period of time, they didn't allow agricultural businesses. Then they opened it up to agricultural businesses. So then they went back, and if your application was not allowed in the original review because it was agricultural, they go back and they've pulled those up and they've been working on those. And then just this morning, I saw a press release that says that now they're opening it back up to more than just agricultural businesses. So now it's reopening again. So if you've already submitted your application via SBA.gov and you haven't heard anything, I would suggest, this is just practical, I would suggest you call them. You're going to be on hold for a long time, but you'll get a live person and they can probably answer your questions. If you filed fairly recently, I would hold tight. They're going to send you an email that gives you a loan number and a way to log in to the portal, and then that's how it goes. If they've sent you an email that says that you're approved, then it'll probably be within the next week. You're going to get an email that asks you to input your bank information. And then shortly after that, a few days later, maybe a week, you're going to get an email that asks you to DocuSign the documents. So once they've contacted you, it goes pretty quickly through the process. These are a little bit different than the PPP loans we're going to talk about. There's a little bit broader ability to use them. They're not forgivable, which would probably be why, except for the grant portion. And so you can use it for paid sick leave, you can use it for payroll, costs, rent, mortgage, other debt that has higher interest than the 3.75 that the SBA is offering for these loans. So it's a lot broader than the PPP loan. So that's pretty much all I'm going to say about EIDL loans. So next and primarily, I wanted to talk about the Paycheck Protection Program loans. So this is an entirely new concept that was created in the CARES Act, addressed specifically at COVID-19 relief. And so these loans are very popular because they're forgivable to the extent they're utilized for the purpose they were designed. So basically, you're eligible for this loan if you are generally under 500 employees. The normal requirements that apply to an SBA loan based upon revenue or income don't apply to the Paycheck Protection Program loans. So pretty much any business, as long as you're under 500 employees, can apply for a PPP loan. So the amount of the PPP loan that you're eligible to receive is your average monthly payroll costs within the prior year or 12 months. I'll get back to that point. You take your average monthly payroll, you multiply it by 2.5, and that's your maximum loan amount up to $10 million. If you've already applied, you already gone through this process. If you haven't applied, there are still funds available, so you can apply. Some banks are no longer doing them, so you have to check with your bank to see which banks are still processing these loans. But some banks are giving you the ability to use either your 2019 data or your trailing 12 months, and others want your trailing 12 months. So you have to check with the bank to see specifically what they're going to ask you for. When they refer to payroll costs applies both when you get the loan and then when you use the loan and then when you seek to forgive the loan. So this definition of payroll costs applies in several different places wherever you are in the process. So payroll costs include any salary, wages, commissions, tips, paid leave. So the general, what you would pay someone in compensation gets included in payroll costs. In addition to that, we include healthcare premium benefits that you pay for the employer. So these are ones that the employer pays for the employee. If the employee pays their own, it doesn't count. And then retirement benefits. So if the employer has a 401k or some other matching program and the employer pays for those costs, that gets included in the definition of payroll costs. A couple things that are on the slide that I just want to point out that do get included in the definition of payroll costs. If you terminate someone and you make them a severance payment, that gets included when you're calculating payroll costs. And also the employer's share of state unemployment taxes. So the employer's share of FICA and FUSIA doesn't get included in the calculation. but the employer's share of the state unemployment tax that gets paid gets added into the calculation to determine what's a payroll cost. And in many cases, if you use like an ADP or other payroll service, they had started a few months ago running reports to help employers figure out what their numbers are for purposes of filing for their PPP loans. It's my understanding now that we're getting into the period of forgiveness, that some of those same employee payroll companies are starting to put together the reports to help businesses file their forgiveness application, which we'll get to that in a few minutes. But that's the definition of payroll cost. Another caveat, so payroll costs do not include compensation for people over $100,000. So what that means is when you're calculating your payroll costs for the prior 12-month period, once the amount you paid someone for wages and salary exceeds $100,000, you stop including the amount. So you can only include up to $100,000 per person, but that does not mean that caps all of it. That only caps the compensation. You can also, for those same employees, so if you have an employee that earns $150,000 a year, the maximum compensation you can count for the period of 12 months in this case is $100,000. But you can also count any health insurance premiums you paid for them, and you can count any retirement matches that you paid for them in your calculation of payroll cost. And the last two things on the slide here, which we'll talk a little bit more at the end, before the CARES Act came into place, we had the Families First Coronavirus Act, I believe it was called, that allowed for, that actually required employers to do both paid sick leave and paid Family Medical Leave Act if it dealt with child care, which we'll talk about that a little bit later. Both of those required payments allow the employer to get a credit back on their employment tax requirements to cover the wages they pay under those two, under that act. And because of that, those wages don't count with respect to PPP loans. So when you're requesting your PPP loan, any wages that you paid under those reasons that you're going to get a credit for, you don't count as a payroll cost. And then on the back end, when you seek forgiveness of the loan, you're not eligible to get those forgiven because you're getting a credit elsewhere for those expenses. So that's the rationale for that. So now that you've gotten, so once you get your Paycheck Protection loan, a couple things about that if you're still in the process of applying. So the amount you can receive is simply 12 months of payroll averaged out divided by 12. So the total amount divided by 12 times 2.5. That's the amount you're entitled to get for a PPP loan. Once you get your PPP loan, then there's two things. What can you do with it, and how long do you have to use it in order to be eligible for forgiveness? So the allowed uses of the loans are you can use it for payroll costs, the definition we just talked about. You can use it for, so what that would be is wages and salaries up to $100,000 prorated over the period. So when the PPP loans were first created, the amount of time you had to utilize the PPP loan was 8 weeks. And so what we would tell borrowers, employers with regard to your payroll costs is if you have an employee that on average earns more than $100,000 a year, the amount that you can use your PPP funds for is equal to the $100,000. You take that, you divide it by 52 weeks in the year, you multiply it by 8 weeks, which is the amount of time you can use the money, and that's the maximum amount you can pay the employee with these funds. You can pay them with other funds, but with these funds, that's the maximum amount you can pay the employee and receive forgiveness for. Now, that doesn't mean you can't pay them their regular wage. It just means the only amount that these funds are applied to and you can get forgiven is that amount. Now, recently, about a week and a half ago, we got the Flexibility Act, which extends the 8 weeks to 26 weeks that you can use your PPP funds. What we're waiting on, and we haven't heard yet, is the SBA going to apply the same rationale to those $100,000 and more employees as it relates to how much you can pay them during the 26-week period for purposes of using the funds. So I would, on the one hand, I think I would assume they would do it the same way, but on the other hand, I can see where they might limit that if they didn't want you to be able to pay so much to higher compensated and would want to push you to pay more to wage and hour employees. So we're still waiting on guidance on how that exactly is going to work. Some other uses of the loan proceeds, like we said before, healthcare benefits. You can pay interest on your mortgage. You can pay interest on other debts that are incurred that you have existing prior to February 15, 2020. That was the cutoff for debts. The debts had to be existing on February 15, 2020 in order to qualify as a allowable use for the loan funds. The one thing I'll point out there, if you go back, I'm sorry, the one thing that I'll point out with regard to that is you can use the funds to pay debt or interest on debt obligations, but it's only forgivable to the extent you use the money to pay interest on mortgage obligations. So if you want to use the funds to pay interest on other debts, you can do that, but it doesn't fall under the definition of what's forgivable under the loan. So most people are simply using the money to pay the forgivable obligations, but it is available to pay other debt interest. The other thing you can pay is you can pay rent. And actually how the statute reads is it allows you to pay lease payments on your office leases. It also allows you to pay lease payments on leased equipment, which depending on the industry and the business, that might be more substantial than your office lease. So that's another use. The last use that I'll mention is utilities. So you can use it to pay your utilities. That includes electric, water, gas, internet, I mean gas by propane, internet, any other utility that you have, as long as you had it operational and under agreement before February 15, 2020. So it's not just go add a bunch of utilities. Initially, when the CARES Act was passed, the SBA came out and they said in order to qualify for full forgiveness, you had to use at least 75% of your loan proceeds on the things that fall in the definition of payroll costs. And the remaining 25% could be used on non-payroll costs like interest, utilities, rent, and those types of expenses to be eligible for the forgiveness. The recent flexibility legislation that just came out that extended it to 26 weeks also provided that they changed that 75% to 60%. So now in order to qualify for the full forgiveness, you need to spend at least 60% of your PPP dollars on payroll related costs, and you can spend up to 40% on mortgage interest, utilities, rent, lease payments, and the like. A couple special things about the program that I'll just mention if you haven't gotten it yet or if you're in the middle of getting it is there's no personal guarantee that's required. There's no collateral that's required for these PPP loans. They're non-recourse as long as you operate in accordance with the law and don't misuse the funds. And there's no requirement that you have to try to obtain a loan elsewhere. Sometimes when you're getting an SBA loan, they're kind of the loan of last resort and they want to be sure that you couldn't get funds elsewhere, and none of that applies in this case. So now let's assume you've got your loan, you're using it to pay your expenses. There's really 3 limitations on the amount of forgiveness that you can get. So the first one, as I mentioned a minute ago, is that you have to use at least 60% of the loan proceeds on payroll costs. Then there's potentially 2 reductions in the amount you can get forgiven. The first one is a reduction in the number of your employees during the period, which we'll talk about in a second. And the second one is the reduction in salary and wages. So how the forgiveness works is the amount of the loan proceeds that you're able to utilize in what we'll call the covered period is the amount you can apply to once it's complete, you apply to the bank and request forgiveness. That's how the forgiveness component works. When the legislation was passed, the covered period was defined as the 8 weeks following the date you got the loan. Those were the 8 weeks you had to use the funds. It was contemplated that following the conclusion of those 8 weeks, that you would then make a request to the bank and the SBA to get the loan forgiven to the extent you appropriately used it during that 8-week period. That is what has changed, in that now the SBA says you can use it over a 26-week period. If you borrowed money before the flexibility legislation, which I think was signed by Trump on about June 5th, if you borrowed the money before that date, you as a borrower can elect to either use the 8-week period that you originally borrowed under, or the new 26-week period. And you might think, well, of course I would want the 26-week period. And yes, that might be true, and maybe it's not, because the 26-week period isn't just for purposes of using the money. So all of the tests and periods related to the forgiveness, including not only did you spend the money, but these limitations, the reduction in the number of employees and the reduction in salary and wages, those also have now a 26-week period applied to them, not just the 8-week period that was applied under the prior rules. So as a business, if you're borrowing the money, you want to look, if you've already borrowed before June 5th, you'll obviously want to look and see, was I able to fully spend it in the 8-week period? Most businesses were not, simply because of the way the numbers worked out. Having 10, 12, 15, 20 weeks to spend the money might work better for your business. If you're a restaurant and you were closed and now you're open, it might work better. I do have a couple clients who were able to fully spend appropriately their money during the 8-week period. Their perspective is, we're complete. We would rather have this be complete. We would rather know what we're dealing with. Our 8 weeks is done. Let's go ahead and file for our forgiveness and have it be complete, rather than have to watch their full-time employees and their salary wages ratios for the next, 14 weeks, the extra time, 16 weeks, the extra time, and wait the extra time when they don't need to. So we'll talk a little bit about how the forgiveness works, but you'll want to evaluate that with your advisors and your internal people to see what's the best for you. The reductions, so there's the two reductions, which is the full-time employees, and then we'll talk about the wages in a second. So when you go to apply for forgiveness, let's just assume your loan was $100,000. You've used the entire thing for payroll and permitted expenses, and you go to the bank and you say, I request to get my $100,000 loan forgiven. The first thing they look at is, did you spend at least 60% of the money on payroll costs? Yep, I did that, check. The next thing they look at, in order, according to the guidance, is they look at your full-time equivalent employee headcount, and they apply a fraction to it. And the fraction is, we take your forgivable eligible cost, which in my example is $100,000, and we multiply it by a fraction. The numerator is your average full-time employees during the covered period. Well, if you remember, I told you initially that covered period was the 8-week period starting on the date your loan originated for 8 weeks. Under the legislation, if you pick the 26, if you go under the 26 weeks to use the funds, this becomes the 26-week period that you have to manage what those numbers are. For purposes of calculating full-time equivalents, some of my clients made this, they use 30 because that's the number of hours for full-time in their business, but actually the SBA came out and said you need to use 40. So 40 hours per week is what's a full-time equivalent for purposes of this calculation. And the SBA said, to make it easy on you, if you'd rather, you can either A, calculate exactly your full-time equivalent, average it out, or B, you could assign to each employee, if they're a full-time employee, they get assigned the number 1. If they're less than a full-time, which is less than 40 hours a week in a particular week, they get assigned a 0.5. And if you use that formula consistent across all these calculations, you can use that short method. Otherwise, you have to calculate per employee each week based upon a 40-hour work week. So you can decide whichever works better for you in that scenario. A lot of my clients are using the short method of assigning more than 40 or more hours, a 1, less than 40 hours, a 0.5. One caution I'll give you is if an employee works more than 48 hours, there's still only a 1 for that week. So if they work 48 hours in 1 week and they work 35 hours in week 2, in week 1, they're number 1. In week 2, they're less than a 1. So you have to be careful that if you have some overtime, it doesn't skew your calculation. That's when you got to be pretty specific about it. So going back, so you take, in my example, $100,000 of what you want to get forgiven, and you multiply it by this fraction. So the top is your average full-time equivalents during the covered period, whether that's 8 or 26 weeks, up to you, depending on which period you're using for your loan forgiveness. The denominator is your average full-time equivalents during your selected period. Now, selected period is not a defined term, but I put that there because you as the borrower actually get to select. There's 2 periods to select from that you can use as your denominator for this fraction. And it can either be February 15th to June 30, 2019, or it could be January 1 to February 15, 2020. So use either of those 2 periods. You get to choose whichever period is less and works better for you when you're doing the calculation. So assume that, just for easy math, that your full-time equivalence during your covered period is 3, and your full-time equivalence during the prior year period was 4. Your fraction is 3/4 or 3/4. So when you go to seek forgiveness of your $100,000 loan period, it's $100,000 times 3/4, or the amount you're eligible to get forgiven is $75,000. So that's how that applies. And that can be a pretty significant reduction. So you really have to watch that. And one of the things the CARES Act said is if you terminate an employee between March 26th and 30 days after, which is March 26th to April 26th, which is the magic of that is 30 days after the CARES Act, and you bring them back on, they don't count against you for purpose of these calculations. So if that's an issue for you, you're going to want to look specifically at the ratios and numbers and decide if you need to bring on additional employees at some point in this period to maintain this at a number 1. That's your goal, or at least closer to 1. The next reduction, this is a lot of information on here, but the next reduction is basically if you have an employee that their wages were reduced by more than 25% in the covered period as compared to their prior quarter wages, then your reduction amount is going to get reduced. Your forgiveness amount is going to get reduced by the amount of their wage reduction. So at first we didn't know what that meant. The SBA came out and they said, look, if you have an employee that's making $1,000 a week, you reduce them lower than $750. So let's say they were making $1,000 a week, you had to reduce them to $700. The only amount that your forgiveness is reduced by is the differential, or the amount they went below $750, or 25% reduction. So in the example in the SBA regulations was, you have an employee that makes $1,000 a week. You paid them $700 a week due to financial circumstances. And so as a result, they are making $25 a week less than the 25% reduction limit. So you would take that $25 a week, you'd multiply it in that example by 8 weeks, and so your loan forgiveness is reduced by a few $100s. So this isn't that significant in most cases of a reduction. The prior full-time equivalence is more significant. The other thing that has us not be as significant is a couple reasons. The first one is if you have an employee who makes more than $100,000 a year, this idea of a wage reduction doesn't apply to them. So if you reduce their wages by 25, 30, 35, 40, it doesn't, this reduction doesn't apply. It doesn't take into account those folks. The second thing that it does is that if you've already dealt with an employee in the prior FTE calculation, you don't take them into account here. So what I mean by that is if you had an employee that was terminated, their hours were eliminated, you took that into account in the calculation of full-time equivalents because their hours aren't there anymore. So you don't have to take them into account twice here to reduce for their wages as well. So that's another thing that was helpful in the SBA regulations. And then the third thing is, if you terminated someone, you ask them to come back to work, and for a variety of reasons they turned you down and said no, you do not have to count them in this calculation. However, there's a couple requirements. A, you have to deliver them a written offer of employment. So you have to prove that you sent them a written offer of employment and they rejected it. And the last thing that just got added in the SBA regulations is you have to report that to Florida Unemployment. So basically, the SBA is saying if you offer to rehire someone, they turn you down, you don't have to count them as long as you tell Florida Unemployment that you offered them a job and they said no. So that's an additional requirement that got added, to not include them when you're calculating this potential forgiveness reduction. A little bit about the forgiveness process. So everyone was asking, how long do I have to apply for my forgiveness? And so the most recent flexibility legislation clarified that for us. They said you have 10 months after the expiration of your covered period. And that covered period, again, is either the 8 weeks or the 26 weeks, depending upon what your business, where you borrowed at and what your business elects to do. So you have 10 months to apply. What the rules say is that the bank has 60 days after you apply for forgiveness to decide whether or not they recommend that you get forgiven. And then they send that, they have 60 days to submit it to the SBA. And then the SBA has 90 days to either review it and or send the money to your bank for the forgiveness. If for some reason, I don't know when this would happen, but if for some reason a borrower has paid money on their loan that then subsequently gets forgiven, when the SBA sends the money back to the bank is to return that money to the borrower. And I'm not really sure that's going to happen too much, but that's what the rules say. A little bit about the forgiveness process. So there was a lot of discussion about a month ago about some new FAQs that came out by the SBA, basically saying, hey, by the way, we know that you took your loan, you signed the certification that you met the criteria, and that due to the uncertain economic conditions, there was a question about the viability of your organization. The SBA said, perhaps you didn't fully understand the certification when you signed it. So let us tell you that you need to relook at that and be sure that your certification was correct. And if it wasn't correct, you need to send us the money back. So that created a lot of fury and craziness for a while. And a lot of people were scrambling around. And eventually where that ended up is the SBA came out at the last minute after an extension and gave us a little bit more guidance. Basically what they said is if your loan is $2 million or more, the SBA is going to review the loan and they're going to review the certification. That's going to happen when you request forgiveness. They're not going to do anything until you request forgiveness. The forgiveness request landing at the SBA is what's going to trigger the scrutiny of the loans over $2 million. If you have affiliated entities, common control entities, and one of them borrowed $1 million and the other one borrowed $1.2 million, both those loans are going to get reviewed because for purposes of $2 million threshold, they're aggregating affiliated entities together. I have a couple clients that fall into that. They also said if we review your loan and we determine that you were not entitled to the loan, the remedy is not going to be any sort of felony, criminal, perjury prosecution. The remedy is going to be they're going to send you a letter and they're going to tell you to repay the loan. And so as long as you repay the loan, there's going to be no further issues about it. If you're under $2 million, it's very unlikely, basically at this point, you're not going to get, your loan's not going to be audited. Your certification is not going to be audited. So that was the guidance we got from the SBA about the certification. There are still clients who are concerned about it. If your loan's over $2 million, you should be concerned about it. I wouldn't say overly concerned, but I would say it's important that you have documented records internally that whereby you consider the certification, You list out contemporaneously why you feel like you fell within the loan, why you needed the loan, what was going on in your business at the time that justified why you needed it, just so you have some internal documentation. So when they ask the questions, you have the answers and you have the documentation to back it up. In a lot of cases, our clients did either had a board meeting where they talked about it, listed reasons, an internal memorandum among senior executives, or something documenting what the need was for the loan, what was happening, whether it be you were closing locations, your supply chain was interrupted, you know, people weren't using your services, whatever it was, you document that internally. And then there's an alternate covered period. Just in the forgiveness application, it gets some guidelines on the payroll periods, and it basically says you can either start right after the day your loan was originated, or you can start for payroll purposes on your next payroll period to calculate the amount of payroll costs. And then on the back end, if your loan ends, let's say on the 12th of the month, and your payroll doesn't get paid till the 15th, you stop counting the spend on the 12th, but as long as you pay it in your next payroll period, you can count those. So there's some good guidance in the instructions of the forgiveness application that tell you how to do that. A couple more things about this. To the extent that your PPP loans are forgiven, it's not taxable to you. There's no income tax involved. But the IRS did clarify that to the extent you pay expenses with funds that are forgiven, you can't deduct those expenses. If you pay expenses with a loan, you can deduct the expenses. If you pay expenses with a loan that's forgiven, to the extent of the forgiveness, you can't deduct the expenses. There's credits for your paid sick leave. I'm going to talk about some credits, and then we're going to go to questions. So as an employer, if you qualify, or if you have an employee that you need to pay paid sick leave, and that's up to $511 a day for equivalent of 10 days, or if you have to pay family leave, which is up to $200 a day for someone who can't come to work because their school's closed and they don't have childcare. All the funds that you pay under those programs, you're eligible to get a credit against your withholding and employer taxes that you pay into the IRS. And so that's how you recoup that money. If you're withholding, if your tax payments aren't enough to cover what you had to pay under these programs, the IRS has a form and some ways that you submit to the IRS, and I'll actually send you back a check. You can find that on irs.gov, how you do that. One thing I'll say about these payments is the employer's portion of the Social Security tax is not due on these. The employee withholding is, but the employer's portion is, you don't owe it for these particular payments. And these payments are required, and you can't force an employee to take their PTO or paid time off leave before you pay these amounts. So these are required payments that you have to make under the Act. This is the employee retention credit. This only applies to businesses who do not take a PPP loan. If you take a PPP loan, you can't use this credit. And it's up to $5,000 per employee. And it basically, you have to show a decline in your gross revenues. I think it's at some point, you have to have at least a 50% decline, and you can't be more than an 80% for the entire year for this last 3 quarters. So there's some specific percentages of your business reduction that have to apply for you to get this credit, and you can't get it if you've applied for the PPP loan. This is the payroll taxes. So the employer's portion of payroll taxes can be deferred, and they can be repaid. So you can defer them for the year of 2020. So you can defer them from March through December 31, 2020. And then you have to pay them to the IRS in 2 payments, 50% on 12/31/2021 and 50% on 12/31/2022. Originally, you couldn't do this if you requested forgiveness under a PPP loan program, and the recent Flexibility Act changed that. So now everyone, whether you have a PPP loan or not, you're entitled to this business tax deferral. One caution that I'll give you is if you're an owner of a business, or you're a CFO, or you're in charge of these payments, and you have a concern about the business's viability, don't defer the payments. The reason I say that is that those payments carry with it personal liability to the person responsible for making the payroll tax payments and the owners of the business. And so even though they're deferred, if something were to happen between now and the date those payments are paid and they don't get paid, that's going to subject the owner of the business and likely the people responsible for payroll for personal liability, trust fund recovery to the extent of those payments. So think twice as you go through the process of considering whether or not to do that. It's a good deal if you're sure about the viability of the business, but you wouldn't want it to raise personal liability for you if something happens before those dates and those taxes are paid, because they are personal liability to the individuals. So those are primarily the tax benefits. There are some charitable contribution thresholds that have been changed and things like that, but I'll stop there and see if there's any questions, Jackie, since we only have about 15 minutes left.
Thank you so much, Jenifer. This was just a wealth of information, and as many sources as I have had for information on the EIDL and the PPP loans, I learned a number of details, particularly given that Congress and the President approved the Flexibility Act just within the last 2 weeks. So we have a lot of questions that have come in. I think some of the questions that were submitted earlier in the presentation have been answered. So I've tried to quickly group them into EIDL questions and PPP questions, and then some more general questions. So here we'll go rapid fire. So on the EIDL side, are independent contractors eligible for EIDL? Number one question. Number two on EIDL is, can you give a couple of examples on the collateral side that's required?
Yeah, so independent contractors are eligible for EIDL. I don't believe that they're eligible for the advance, but they would be eligible for the EIDL. If they were eligible for the advance, it would only be $1,000, but I'm not quite sure on that. But they are eligible to apply. The SBA is going to ask you gross revenue and the amount of your expenses for the prior year, and that's how that's what they're going to use to determine the amount of your loan. And so yes, you should definitely apply. Go to SBA.gov and do that. With regard to the second question about collateral, so in my experience, what they sent in the loan documents was basically you're pledging a security interest in all of your collateral, in all of your tangible property. The borrower is, so that would be vehicles, could be equipment, could be if you have an office, it could be copiers if you own them. It could be machinery, it could be your business vehicles, anything that's a tangible personal property. And I don't know yet if you have a loan on them already, it will be second to whatever loan you have on them. So it's not going to be an interest that precedes any other purchase loan. So if you bought a vehicle and you have a bank loan, it's going to be after that. So it'll be in addition to that. And I don't know yet if they're going to record a UCC filing statement on all these EIDL loans. I have no idea. They have a large volume. They're not used to their large volume, so they may or may not put the world on notice about those, but they are going to have the buyer sign, the borrower sign a security agreement agreeing to the pledge of those assets.
Great, thank you. One question came in about the ability to have both EIDL and PPP and how they impact one another if a business secures both.
Sure, so yes, you can secure both. The PPP has very specific uses. The EIDL has a little bit broader uses. So yes, you can secure both. How they interact together is when you go to request your loan forgiveness under the PPP loan, one of the questions on the forgiveness application is, did you receive a forgivable grant under the EIDL program? If you did, that reduces the amount you can get forgiven under the PPP. So that's really how they work together.
Great, thank you. On the PPP side, one question came up about the extension of the period through flexibility. Was it 24 weeks or 26 weeks? It may just be semantics given that it's to the end of the year as I understand it.
No, you know what? As I was saying, and I was like, is that 24 or 26? Let me look it up real quick. Because as I was saying, and I was like, does that sound right? Okay.
And then a question on PPP, independent contractors and sole proprietors are eligible for PPP.
Yes, so sole proprietors and independent contractors are, it's 24 weeks. I've been saying 26. Every time I say it, I was like, that sounds kind of weird. It's 24 weeks. It's actually the shorter of 24 weeks or December 31. So if you get your loan a little bit later in the year, your cutoff's going to be December 31. So thank you for bringing that up. Sole proprietors, yes, they are. You can file a PPP loan application. There's some guidance out there from the SBA on the SBA website that's specific to independent contractors and sole proprietors, and it tells you exactly how to calculate your loan amount, because it's a little bit different than calculating in a business that has employees. One thing that I didn't say that I will say is that when a business applies for a PPP loan and you're calculating your payroll, you cannot include a 1099 contractor as an employee for those purposes. When the CARES Act first came out, it was a little confusing written that they said 1099 payments count when you're calculating payroll. The SBA quickly walked that back under the rationale that a 1099 or independent contractor can apply for themselves, which is an onerous process. I don't really understand that, but can apply for themselves. And so a business can't use those as wages or salaries for purposes of their own PPP loan.
Great. A couple questions on appropriate expenses under PPP. Under the lease expenses, vehicle leases included in that calculation, and cell phones? Or does it need to be?
That's a good question. You can, I think the answer is yes, because the way that it says lease obligation. See, I used to have it right here on my desk. But we can certainly, I'll look up, I know that equipment leases, copier leases, that kind of thing. So I would think that vehicle leases would apply, but we can send up a follow-up about that. I'll just double check, but I think the answer is yes.
Great, and that's a good reminder, is that we will be archiving the questions, knowing that we may not be able to either get to all of them today or have the answer on the fly, so we will be following up with you. Administrative fees for payroll, if you're using a third-party payroll, is that an appropriate expense? No. Okay, I see her shaking her head no.
Oh.
If you choose the 24 weeks instead of the 8 and you exhaust your funds in less time than the 24 weeks, can you apply for the forgiveness before the end of that 24-week period?
That's a really good question. We're kind of waiting on SBA guidance on that. We haven't gotten an answer yet. I have a lot of people asking that question. My initial inclination is the answer is probably going to be no. The reason I say that is because all of your periods have been shifted to 26 weeks. So unless they make if that makes sense, like they changed the definition of covered period to 26, I keep saying 26, to 24 weeks. They changed the definition of covered period to 24 weeks for a couple different purposes in the legislation. And so, because it's a defined term that's used for your full-time equivalents and some other things. So we're waiting on SBA guidance on that. I'm not hopeful the answer is going to be yes.
Gotcha. Yeah, I know there's some guidance needed on a number of items. Can the interest be an itemized deduction on 2020 taxes?
Which interest? The interest like business interest that you pay with your
interest on these loans.
Oh, the interest on these loans. To the extent you pay interest, it's unlikely you're going to pay interest this year.
Okay.
Because everything's deferred. So if you're an accrual taxpayer, you'll be able to likely deduct the interest. If you're either A, it gets forgiven, or B, it's deferred and you're a cash taxpayer, you're not going to be able to deduct the interest. If that makes sense.
Another question on the eligible calculation for PPP forgiveness. Can you count payroll tax payments as part of that calculation of what is forgivable?
You can count, you can count the employee's portion. So the employee's portion you would count because you're going to count the gross wage for the employee before you take out the employee's portion. The employer's portion doesn't get counted except for the state unemployment.
Okay. The information you covered towards the end on the delay available for business payroll taxes, is there an application process to be able to delay, or do you know how that will work?
No, I don't think so. I think you just need to check something on the 941. There's a lot of information about that on irs.gov. There's a whole section, and I don't know the answer to that, but I think that there may be something that you just need to indicate on your filing, but I'm not certain.
Okay, a question again about subcontractors, but from the employer standpoint, if they as an employer are using subcontractors and they pay them, can the loan be used to pay them? She's shaking her head no, because they are eligible themselves
Yes.
to apply for PPP.
Yes.
Gotcha. I am still scrolling through and trying to see if I've grouped these questions appropriately. Another question again on this administrative fee by payroll companies. If they use a payroll provider and they charge an administrative fee, the fee is not included.
Generally, no. I have had clients ask that question. I haven't seen any guidance that allows that.
There was a question regarding employee hours that were decreased because the employee was ill and needed to take time off for sickness. How does that impact the calculations on the PPP side?
So, and was there any information about when that happened?
There was not. My assumption would probably be it's during whatever their claimed period would be, but that's only an assumption. They didn't give that detail.
Yeah. So, to the extent they were paid, I think that it doesn't have an impact. To the extent they weren't paid, I have to look that up because I don't know. But if you would make a note, I'd be happy to look it up and send out the answer on how that works.
A question came up, and I think this may be an easy answer. If you've already received your PPP loan, and it says for the 8 weeks, can you reapply for additional loans through the 24-week period? That doesn't really impact the amount of the loan, correct?
No, the additional 24, the additional period doesn't impact the loan amount. It just impacts the amount of time you have to use the proceeds and be eligible for forgiveness.
If someone counted an employee in their loan calculation, can that employee be fired later without changing your forgiveness qualifications?
Yeah, so that's a tricky question. So yeah, you can fire them later. You'll want to look at a couple things. Well, first thing is if you fire them for cause, and there's some guidance on what that means. If you fire them for cause, it doesn't count against you at all. If you fire them just because you don't like them, couple things. It counts in your calculation of full-time equivalents. So the first thing you want to look at is what full-time equivalents did you have in the prior period you're going to use as compared to how many you have now, and see the impact it has on your ratio. And if you replace that person, then it doesn't impact it really at all unless you wait a couple weeks in between to replace the person. It's just math. You just have to look at the numbers and figure it out. But if you do fire them for cause, then it doesn't count against you.
Okay. One more question that I think we haven't touched on yet. Can a business prepay either rent, mortgage, or utilities and have it be included in their calculation?
No, not really. So the legislation talks about paid or incurred. And if you look at the forgiveness application that's been issued by the SBA, there's an entire paragraph that talks about how you can calculate your interest and your rent and your utilities. And so it's when you pay them and then for the following period. So for example, if your loan period ends June 15th, or let's say July 15th at this point, you can pay the utility for the first 15 days of July. You can prorate that, but you can't pay for time outside, no.
Jenifer, I cannot thank you enough for the time and expertise that you've shared with us today. I want to once again thank our sponsors for all of our webinars and seminar series, LaPensie Plumbing, Pools and Air, Veritas Pest Management, and of course today we thank the Blalock Walters Law Firm and Jenifer. So with that, Jenifer, thank you so much.